and low-lying coastal areas are often the most vulnerable to the impacts of extreme weather events exacerbated by climate change. But if there is no insurance, what it means is when the inevitable happens, when there is an extreme weather event or a natural catastrophe, if there is nothing there, the impacts can be devastating. I don't think we need any more evidence. So how do we support them? The insurance industry has a huge role to play. It's there to ensure that individuals, communities, businesses, governments have a financial safety net should something go wrong. So I grew up working in government in New Zealand. During that time, New Zealand suffered a couple of really large earthquakes, and one of which killed 150 people and levelled an entire city called Christchurch. Someone approached me about working at Lloyd's, and of course I thought, why would I want to get in financial services, and least of all insurance? I did some research and found out that it had provided over 50% of the financial support and recovery costs going back into Christchurch, New Zealand, to help rebuild that city. And so I joined Lloyd's, and I fundamentally believe in its purpose and what it's here to do. And so that is why I am still here 9 years later. I'm Rebekah Clement, and I'm Corporate Affairs Director here at Lloyd's. Insurance is essentially a contract in really boring terms, but what it is actually a promise to pay when the unexpected or the unthinkable happens. No one wants these things to happen, but sometimes they do, and the financial and economic impact of those really does significantly impact individual or a community's ability to rebuild and recover. And oftentimes when you get that recovery financing, the reconstruction may not cover the entire cost of what was lost, so you end up with infrastructure and homes that are less resilient. So there's quite a vicious cycle here that we need to break and to support the resilience of small and developing states. So the insurance industry has a huge role to play in building greater societal and economic resilience on a number of levels. What they can do is actually be there to take some of the risks that the government is holding on its balance sheet. It can't take it all, but it can certainly take slices of that risk to ensure that governments aren't needing to go to the taxpayer, rising taxes or spending a dollar that could have been spent on healthcare, having to spend it on recovery instead. So over the years, we've seen a number of new and emerging innovative financial instruments come into play to support the resilience of small and developing states. One of the key ones that has come into force over recent years is something called parametric insurance. And in simple terms, there is a predefined trigger, whether it be the speed of a gust of wind through to the level of waters rising from a flood, for example. And when it hits that trigger, the payout is instant. And what that does provide is certainty. That means that the industry can react quite quickly, in many cases pay within hours or even, days, including the support mechanisms that surround it. For example, boots on the ground, people to be there to help recover. So I think there's a really interesting area we can explore and look to utilise when we're thinking about the hospitality industry and the insurance industry. Now, we know that in small and developing states, there are many hotels and resorts that rely on the local communities to support not only their own workforce, but they're also reliant on the nature that surrounds them. So there is a really clear opportunity here to think about where insurance solutions can support the resilience, particularly of the hospitality industries, but their surrounding ecosystems. Where can we go with that? I think we can work together on education and thinking about how the hotels and resorts themselves can purchase insurance or invest in the nature and invest in their communities. What has to go hand in hand with that is the adaptation and resilience measures that are being taken. Of course, the more resilient you are, the more likely it is that you're going to have a lower risk price afforded to your policy or to your premiums. Every $1 invested in disaster mitigation actually saves at least $4 of disaster response money. The United Nations estimates that by investing $6 billion a year in nature-based disaster risk management, like the restoration of coastal ecosystems, can save the world around $360 billion in avoided losses over a 15-year period. So the numbers speak for themselves. I don't think we need any more evidence to prove to us that investment in nature is a smart investment. But unfortunately, of every $100 invested in disaster finance, only 50 cents is spent on disaster resilience. The balance is off, and the insurance industry needs to play a big role in helping rebalance those efforts and helping to educate, and public-private partnerships are absolutely critical to that effort. Collaboration is going to be the fundamental key that unlocks progress towards supporting transition and also resilience to the impacts of a changing climate. It is so important that we think about partnership in a new way. This isn't going to happen overnight. This is a multi-year, multi-decade change and transformation of a scale that we have never seen before. And I think it has the potential of bringing people together and uniting us all within our common bonds that we have as humanity to say that life is worth protecting, that nature is worth protecting, and that ultimately everyone will be better off for that.